All right. Well, welcome to the blockchain.com September market outlook. We've entitled this one The Ultimate Rebound Machine. My name is Nicholas Carey. I'm one of the co-founders of blockchain.com. I'm also one of the co-founders of the Blockchain Commission for Sustainable Development and the author of The Future is Decentralized. I'm very excited to share with you today a little bit about what we've been watching happening in the markets, as well as get some fascinating insights from one of the original crypto entrepreneurs, Erik Voorhees, will be talking to us about how he is decentralizing his company in a very interesting maneuver that we're looking forward to hearing more about today. So without further ado, I'll do a quick introduction to blockchain.com, talk to you about what we've been working on here over the past month, and then we'll get into the market insights led by Jason Karsh. So a little bit about blockchain.com. We've had a really big month. So in the last 30 days, we've actually eclipsed the 75 million user sign up, and we've actually had over $1 trillion now published to the Bitcoin and other blockchains that we support transactions. So we're really excited about that incredible number. We just published a blog post about that was picked up by a whole bunch of press around the world. And we're still doing
usually we don't interrupt in the middle of these, but I think quattro commas is what we should be maybe titling this conversation.
That is actually probably the way to do that. We're starting to run out of commas. So the Quattro Comma Club on the transaction count is a really big milestone for the firm. The whole team was pretty excited about finally reaching that. And it's a real testament to proof of the on-chain economic activity that is happening across the cryptocurrency industry. Okay. Next up is a little bit more about the company. So in case you didn't know, we sort of have two different divisions of the business. We're really concentrated on helping first-time users send, receive, secure, trade, and exchange digital forms of currency. Those include cryptocurrencies. So you can download the blockchain.com wallet from the iOS or Android store or sign up online. We also have an active trading product, which is basically a place for you to send, receive, trade different cryptos. And I'll talk a little bit about some of the new assets we've recently launched. The blockchain.com Explorer is one of the oldest products in the industry, and it's a great place to get data on what's happening both in the markets and on chain. And we regularly partner with new cryptocurrency projects to deliver airdrops, which is a great way to get crypto for the crypto curious. On the institutional side of the house, we have a prime brokerage offering for institutional clients. We are doing a significant amount of lending for our customers there. We have over-the-counter trading, spot options and derivatives available to our clients, as well as special liquidity and execution capabilities. We have DeFi, active network participation opportunities as well. So if you're interested in allocating capital into a risk-managed DeFi allocation, we support those things, as well as custody and asset management for both cryptocurrency protocol projects and institutions. So a little bit about what we've been shipping lately. Next slide, please. So if you haven't been paying attention, we finally got SegWit live on the blockchain.com platform. And just in the last week, we've announced some new assets available on the blockchain.com exchange. Today, Matic and Maker, but recently, Efi, Sushi, Wrap, BTC, Litecoin, and Clout are all available for trading today. We also have added USDC and Doge into the wallet thanks to popular demand. And then we've made some improvements on instant transfer for USD Euro and Great British Pound for both the exchange and wallet. The simple swap experience, which is the way you can trade between digital currencies and your fiat balances, has been simplified and made faster. So if you've been experimenting with that, I would love to have you give it a shot. We also just launched a much requested feature, making it possible for people to recur purchase crypto. And so if you would like to do some dollar cost averaging, which is a tried and true method of allocating capital, you can set that up, fire and forget, and it'll instantly purchase crypto on a designated schedule of your choosing. Also, on the interest accounts, the feature that allows you to earn some crypto with your crypto, we have added new assets. So if you hold any Doge, Litecoin, DOT, Clout, or USDC and would like to earn some interest on that, you can deposit it in the blockchain.com wallet. And we'll be publishing the interest rates in a slide just a little bit. And then finally, we added the interest feature into the Android wallet finally, and there's a better checkout flow in the exchange as well. Thank you very much. All right, next slide. So the front page for your experience into heading into crypto has seen some major improvements. So please check that out on the blockchain.com side. Also make sure that your iOS and Android wallets are always updated. It's just a good habit to be into. Here's the recently published blockchain.com interest rates for your crypto. So you can have your crypto work for you while you sleep. And you just log into your blockchain.com wallet, click interest, and you can make deposits of any of these following assets. We update these interest rates on a month-to-month basis. And then finally, the blockchain.com exchange, we added those new assets that I mentioned this month. We're constantly making improvements, and we have some really exciting announcements. I'm not quite ready to share today, but over the next 30 days, you'll be seeing some really interesting new features launched on the blockchain.com exchange. You can also expect some new assets launching in the not too distant future as well. So without further ado, last time we spoke, we covered what had happened over the previous month. We've seen some sort of flat kind of market movements in comparison to other months of this year. And we had a special guest, Peter, from Parity, and a spokesperson for the Polkadot community, to talk a little bit more about their roadmap through the end of the year and some of the work they're doing on cross-chain smart contracts. So today's focus, we're going to get an update from Jason Karsh on what's been going on in the market, as well as an overview of the on-chain insights across Bitcoin. And then our special guest today is Erik Voorhees, the CEO and co-founder of ShapeShift, but he is about to retire because he is decentralizing his company. So we're going to be talking to him a little bit more about this maneuver and learning more about his perspectives as one of the oldest entrepreneurs in the cryptocurrency industry. All right, I'm going to pass it off to Jason Karsh on the market outlook.
Thanks, Nick. And for those of you who don't know me, I'm the VP of Marketing here at blockchain.com. And I always like to joke, especially with developer teams, that the 9 scariest words you can hear in the English language are "we're from marketing, we're here to help." But in a lot of ways, crypto has a marketing challenge to cross the chasm to the mainstream. So in terms of what happened in the market last month, the crypto rally continues with a strong demand for NFTs and layer 1 alts to BTC and ETH. So if you just look at Bitcoin and Ethereum, I guess the standard blue chip cryptos, they had a pretty decent month in August. Already today, we've seen a big run on ETH and for BTC. But I think when you compare it to how the S&P 500 and gold and the 20-year Treasury bond, the story sort of speaks for itself. I think we would be remiss if we didn't say there's so much excitement for ETH-based NFTs, and it's hard to kind of take the signal out of the noise, but it's something that we might do a deeper dive in the coming months. And then in terms of layer 1s, we offer some layer 1s that have seen some great performance this month. So Dot, Algorand, but we're watching from a distance at Solana, Cardano, and a few other ecosystems like Luna, Terra that have just seen massive enthusiasm for developers. It's not investment advice. It's more looking at the building in those communities are very exciting. In terms of on-chain insights for Bitcoin, the story is one of slow but steady growth, slow for Bitcoin. And in terms of number of transactions, payments, we're seeing slow and steady growth. In terms of hash rate, that's increased a lot. I think when you look at the share of sort of hash pool rate, the AMP pool's market share has increased in spite of China's mining crackdown. I think that's sort of telling a story that the miners are figuring out solutions. There was a drop in hash rate. It's steadily climbing. And that gives us a sense that not only are miners healthy, but we're seeing a lot of long-term holder consolidation of Bitcoin with not a lot of leverage and sort of a healthy place to be in the Bitcoin market. But today we have a special guest, so I don't want to spend too much time on the market. So Nick, do you want to go ahead and intro Erik again?
Yeah, so it will be a little awkward introducing Erik because it takes a long time to go through all of his different accolades, but I'll keep it in a quick summary here. So Erik Voorhees is among the top recognized serial crypto advocates and entrepreneurs, understanding Bitcoin is one of the most important inventions ever created by humanity. Having been featured guest on Bloomberg, Fox Business, CNBC, BBC Radio, The Peter Schiff Show, and numerous crypto industry events, Erik humbly suggests that there is no such thing as a free market when the institution of money itself is centrally planned and controlled. Erik is the CEO and founder of ShapeShift, a self-custody crypto interface. He was previously the creator of Satoshi Dice, which popularized the concept of provable fairness and was responsible for most of the world's Bitcoin transactions in 2012 and 2013. Prior to that, Erik was head of marketing at BitInstant in New York City. I actually watched Erik debate Peter Schiff in New York City in what was determined to be a total smackdown, voted on by a crowd of enthusiastic participants. And the debate was between gold and the future of money being Bitcoin, and that was quite a pleasure to witness that. So without further ado, we've got a bunch of questions for Erik. Erik, welcome to the Blockchain.com podcast.
Hey, good to see you, everyone.
All right, so first question we ask here, this is a little bit of a ritual. We always like to find out how everyone earned their first buck. So I would love to know, and I actually don't think I know this story from you. How did you become an entrepreneur? How was the first time you ever earned your first dollar, penny, euro, whatever it was when you were a young lad?
Like first meaning like literal first,
yeah.
First ever. Let's see, probably in high school, there was like this, there's lots of fads in high school. And there was a fad for about 2 weeks of these little like microscopic radio control cars from China that you could like customize and tune out the engines and change the wheels and everything. People went crazy for this, and you couldn't buy them anywhere in the United States. And so I bought like, 10 of them, which was this massive wholesale order in my head, and probably made like $200 or $300 from that. So that made me king of the world when I was 16, and felt great about it. That's probably the first, real dollar from like a sale of something entrepreneurial.
I love that. That's a good one. All right, so you're regularly called a crypto OG, or original gangster. So how did that happen? Can you talk to us a little bit about the origin of the discovery you sort of had in the very beginning?
Yeah. Well, after college, and for people listening, Nick and I are friends from college. So I've known Nick here since forever. And after college, I moved to Dubai. And while I was over there, this was 2008, 2009, the entire world financial system fell apart. And I got very interested in monetary economics and in banking and central banking and how money worked and all that. Came to the conclusion that, of course, all of it was horribly flawed. And the central problem was that governments were managing money. And if a central government shouldn't be in charge of shoe production or food production or car production like they were in the Soviet Union, why the hell should it be in charge of money production, which is in some ways more important than all three of those? But I didn't really have a good solution. I was and remain a fan of gold, but it just wasn't exciting to anyone. And so I didn't really have a good answer, and I was just frustrated. Fast forward a year or two, I had moved to New Hampshire as part of the Free State Project, and I saw a Facebook post, this was in May of 2011, about this thing called Bitcoin from another person in New Hampshire, another friend of mine. And I clicked on the article and I read it, and I thought, well, that sounds stupid. And then I read another article, and like within an hour, I was completely hooked. And I was like, oh my gosh, here's a way for actual money to work at a foundational layer that has nothing to do with governments, nothing to do with the banking system, nothing to do with fiat currency, and no one can turn this thing off. Anyone can send money anywhere in the world without anyone else being able to stop it. This is obviously one of the most profound inventions in all of human history. So I was hooked, and ever since then, I have been trying to help build this as an ecosystem, as an industry, and just playing my small part in its growth.
Awesome. So as a serial entrepreneur, can you walk us through a little bit about your early companies and the different sort of epics of your journey in the cryptocurrency industry and what you learned along the way?
Yeah. So I was the third employee at BitInstant back in late 2012. BitInstant, for those who don't know, was sort of the first Bitcoin company that ever received like an investment from like a angel investor. So it was a big deal. I think we raised like $50,000 or $100,000 from Roger Ver, who seeded 5,000 of the early Bitcoin projects. And we were in New York, and basically we helped people move money more quickly from a bank account to Mt. Gox, which was the sole Bitcoin exchange back then. And so that was super exciting. This was back when like no one took Bitcoin seriously. The few investors that we talked to were not interested, dismissed it. And so it was kind of a lonely time, but also an exciting time because we had a high conviction that this was something big. And so BitInstant was, 6 or 9 months. Around that same time, as a side project, I started Satoshi Dice. And Satoshi Dice was just this very simple idea where you have a list of Bitcoin addresses. Each one has different odds. If you send Bitcoin to one of those addresses, a roll of the dice happens and you either win money or you lose your money. If you win, the money is sent back, more money is sent back. And if you lose, a tiny dust transaction gets sent back. And this completely took off, far more than I expected, got totally out of hand, and really was a cool demonstration of like how Bitcoin works and problems that it solves. So in this case, it solved two things. One is gambling is notoriously opaque. Whenever you gamble it in Vegas or somewhere else, you don't know what the odds are. You don't know, even if they told you what the odds are, you wouldn't know if that was true or not. Everyone feels like they're getting scammed. They just don't know how much. So Satoshi Dice used blockchain technology to actually prove what the odds were and prove that the roll of the dice was fair according to those odds. So it was a really cool application of blockchain technology to do that. And then almost more importantly, it allowed anyone in the world to send money to the game and for the game to send it back to them without anyone trusting anyone else. No one needed to know who I was. I didn't need to know who the customers were. The system just worked. It was authentic and genuine and transparent and beautiful. And so it was a good demonstration of like why this stuff is so powerful. Sold that in 2013, and I was living in Panama at the time and decided to move back to Colorado and start ShapeShift. And so that's been the last 7.5 years building ShapeShift.
All right, so I've got a ton of questions about ShapeShift because there's a bunch of really huge news that you've recently announced about how you plan to support the project in the future. And so Erik is decentralizing ShapeShift, the company that had previously been one that was founded and run by him with a large team. And I would love to have our listeners understand, like, how does one go about decentralizing a company? And walk us through that process, and also like why you decided to head in that direction with your team.
Yeah, I'll start by saying like a year ago, this was something that I wouldn't have understood or thought possible. And if people proposed it to me, I would have kind of dismissed it. So even for me, this is a fairly new phenomenon. But essentially what we are doing, ShapeShift today is a central entity. We're a Swiss company with several subsidiaries internationally. We have about 72 employees, and we've been around for 7.5 years. In July 14th, we announced that we are decentralizing the company. So what that means is essentially two things. The corporate entity will end up being dismantled completely. No employees, no bank accounts, no business contracts, none of that, all gone. No CEO, I won't be CEO of it. That entity, ShapeShift AG, the Swiss holding company, goes away. At the same time, a DAO has been created, and a DAO stands for Decentralized Autonomous Organization, which is a lot of syllables to basically mean an organization of people that can freely enter and exit it, generally based around a token, and holders of that token govern what the DAO does. So it's sort of a simple concept, but it can be used for any kind of projects, from a charity to a tiny for-profit business to a huge global international platform. And so ShapeShift is open sourcing all of its code, and where the product goes in the future will be governed by the Fox token holders. Fox is our cute little symbol for the token of ShapeShift. And so they will govern where this product goes as an open source platform. So instead of it being shareholders that create an executive team, you have token holders that create whatever they want, right? It could be highly hierarchical, it could be very flat. No one is really in charge, but anyone who has tokens has a vote in its future. And so the whole economic arrangement is based around that token now instead of based around shares. And what that allows us to do is align the project purely with the ethos of Bitcoin and of crypto generally, which is to be decentralized, immutable, and borderless. And if you have a centralized company, it will always be to some degree at odds with that ethos. Not every company can centralize. Not every company that can decentralize should. But this is a new model for economic organization, and so we are trying to help pioneer it and see how far we can take it.
Would love to double click on governance for a moment, and the Fox token, that makes sense. Although when you think about who holds the token, at first it may mirror to some degree a weight towards existing employees or investors. Talk a little bit about how how that will functionally change and how you see it evolving over time?
Yeah, great question. So there are a billion of these tokens, and we created these a couple years ago, and we've just held on to them until we knew what we wanted to do with it. Today, centralized ShapeShift has a number of investors, and those investors control 100% of ShapeShift, the project. We knew that as we try to decentralize, obviously, the insiders of ShapeShift can't own 100% of the tokens, right? It has to be something significantly less than that. So what is appropriate? We ended up somewhere around 30% of the tokens end up in the hands of insiders, including employees and shareholders. So all the employees that are losing their jobs got a nice big pile of tokens, and all the shareholders that invested in ShapeShift, as it winds down, they all get a nice pile of tokens as well. So all those parties have an interest in the long-term success of this because those tokens are locked up in a 3-year streaming contract. So they basically receive those tokens over time, similar to vesting of equity in a company. The rest of the tokens, the majority of them, were distributed out to the world. So we did the largest airdrop ever in crypto history, out to 1.1 million recipients. So they all got, several hundred to several $1,000s worth of the token. So that basically gets a large, broad user base of people that, a lot of them won't care about the project and they'll sell their tokens, and that's fine. But many of them will get pulled in and be part of the open governance of ShapeShift. And then the remainder, about a quarter of all the tokens, we put into the treasury. And the treasury is simply an Ethereum smart contract. And where those funds go is up to the token holders that vote on it. So that is really the bank of the DAO. That's the resources. Today it's worth, like $150 million. So it has a lot of resources. And all the people that have tokens, the public, our users, shareholders, and former employees, all get to guide where this thing goes.
And when you think about the initial governance, are there what's the first sort of question that will be put to the DAO, or have you thought about that?
Yeah, so the DAO exists now, and we've already had several votes. Obviously, you don't want every decision that the project needs to make should not go out to vote, because that would be horribly inefficient, right? So you have to start building some structure. So some of the first votes have been about setting up what we call work streams, which are analogous to departments, right? So there's like a product work stream and an engineering work stream and an ops work stream. These are run by anyone who wants to elect themselves and say, hey, I will run this. Here are my credentials. Give me $500,000 and I will do X, Y, and Z for the DAO. And if they're credible, people can vote up or down on that. And if it's voted up, then that money moves to that person. They then build out their department as they see fit with the resources that they have. So there are lots of structures that can still exist in a DAO. It's not like this perfectly flat thing where everyone has an equal vote on everything, because that would be, quite communist. It would probably fall apart very fast. So the early votes here are about setting up structure. And I'd say the big difference between that and a corporation is the dynamism that the structure can take. Multiple people that are strangers to each other and strangers to me could elect themselves or propose themselves as leaders of the same function. So we could end up with like 3 engineering work streams that are all competing with each other, right? That might be interesting. And if one of them isn't doing well, they're not going to receive more funding and they'll all go away. But unlike a central corporation, if there's a department that's not performing, the amount of friction you need to fire someone is essentially zero. You just stop paying them, which is really how business should work, right? If someone's doing good work, pay them. If they're not doing good work, no more money. And that's a much more efficient way to economically organize, which is actually illegal in terms of corporations. They have to do all sorts of crazy HR rules and stuff like that. And in certain jurisdictions, it's so bad that companies won't even hire people there because it's such a mess. So these DAOs basically bring huge efficiencies in some ways and cause all sorts of new problems in other ways. It's not like a panacea. It's like a messy, chaotic thing, and we're trying to figure it all out as we go.
And so I think double clicking there, I wonder what do people who want to buy the Fox token, who are interested in the project but don't necessarily want to participate in governance, is there are there any sort of staking or delegation mechanisms to give power to someone they trust?
Yes, not for, well, for voting, no. There's no staking for voting purposes. There is staking for liquidity mining. So we are currently encouraging a liquidity pool on Uniswap, Fox, and ETH. So anyone can take Fox tokens and ETH, pair them in the liquidity pool, and earn something like 150 or 200% right now annually. So that's obviously an incentivized liquidity pool that we've set up for the token itself. That does not convey voting rights, but is there for people that just want the economic activity of the token. So people that own the token don't have to participate in governance, but to participate in governance, you do need to own the token.
Okay, so in some of these proposals that have been made already for the different work groups and streams, how does one actually vote? So can you walk everyone listening, like if I wanted to participate in helping shape the future of ShapeShift, how do I actually do that in practice?
Yeah, so this is where the industry is developing very rapidly. A year ago, there were very few tools for DAOs. Today, there are a lot of tools that have been built entirely for DAOs. So we use essentially a stack of like 4 or 5 different products that have been built purely for DAO organization. The one we use for voting is called Boardroom. And in Boardroom, someone puts up a proposal. All of this is done at the base layer by cryptographic keys, right? So you're attaching your wallet, and then you're putting up a proposal, and that's based on your key. And when you vote, the Boardroom is paired with this thing called Snapshot, which looks at a certain block height, and it looks at the token balance at that block height and lets you vote based on your token balance at that height. So you actually don't need to do a transaction to vote, which would be very expensive in gas, but it is based still cryptographically on the tokens that you hold. So it's a very efficient way of doing it. But yeah, Boardroom, Snapshot are the 2 tools we use combined to make this happen. And where this gets really cool is that treasury unlocks based on what the vote is, right? So this is where you start getting the mutability. If the vote says move 100,000 Fox tokens to X address, and the vote hits quorum and hits the majority or whatever the criteria was, boom, money moves, no one can stop it. And obviously it's all on the chain, so it's all audited in real time by the blockchain itself. So it's a really interesting new way of, corporate governance or organizational governance.
Cool. Okay, so if someone wanted to participate, do they sign up for each one of those tools, or how does that work?
You don't have to sign up. These are all decentralized open source things. You just use a wallet, right? So any of the Web3 wallets like MetaMask or Wallet Connect or Portis or KeepKey, Ledger, any of these will generally hook into these things. So you just click connect wallet and then your wallet's connected. It's very elegant, very civilized, and that's it.
Yeah, MetaMask, I think just yesterday announced they've had 10 million monthly active users. So when you talk about the growth in this from where it was a year ago, it's really, really impressive.
Yeah, okay. These numbers are starting to get real.
Yeah. Actually, well, speaking of sort of decentralized exchanges, they're getting a lot of attention these days. And so how does ShapeShift differ from Uniswap? And like, what's your view? Like, are there going to be one DEX per chain? Is there going to be one DEX to rule them all? Like, what do you think is going to happen?
So yeah, DEXs are really interesting. ShapeShift for 90% of its history was not a DEX. And when someone did a trade of Bitcoin to Ethereum, they would send Bitcoin to us in our hot wallet, and we would send Ethereum to them from our hot wallet. So we were the counterparty to that trade. By doing that, that's what caused us to be a regulated entity. That's what caused us to be an MSB, a money service business, and to have to do KYC and all the compliance nonsense. In early 2021, we started integrating DEXs. So first, we started integrating a lot of the Ethereum-based DEXs, so Uniswap and SushiSwap and Bancor and Kyber, half a dozen others, so that anyone converting ETH and ERC20 coins could do it through the DEX. So ShapeShift wasn't a DEX, but we let someone access the DEX through our interface. But that's only ETH and ERC20, right? And so the most important coin in the world is not included in that, and that's a problem. Thorchain came out later in the year in April, and we had integrated Thorchain as well. So with Thorchain, people can trade in a decentralized way across chains. And this is the first time that's ever been able to be done in all of crypto history. at scale. There's always atomic swaps, but those don't scale. So Thorchain was actually a liquidity pool model similar to Uniswap, but it worked across chains. So with those, we felt comfortable eliminating our trading entirely. So ShapeShift no longer is the counterparty to any trade as of April. And all trading done through ShapeShift's interface is between the user on their own keys and the decentralized exchange back and forth. That means we are no longer an MSB. We are no longer a financial institution. We do not need to do KYC or compliance. We're simply a software provider. So that was helpful for us. So we're not a DEX. We simply plug into DEXs. And to your next question, Nick, you asked, like, will there be one DEX to rule them all or one per chain? TBD. The huge innovation in DEXs came from these liquidity pool models. So there were DEXs like back in 2016, 2017 that used order book models, and they were always too slow, too much friction, too much latency. They never took off, even though they were technically very cool. But I think Bancor was the first one to do a liquidity pool model, and Uniswap really popularized it. With the liquidity pool model, DEX trading is liquid, fast, reliable, and has just exploded. And so I think DEXs end up consuming the vast majority of crypto to crypto transactions. They cannot ever handle fiat transactions. Like, that always has to come from a bank at one stage or another. But yeah, I mean, it's really cool to see the decentralization of the coins at the base layer of the blockchain is now moving higher and higher. So now you actually have the exchange layer getting decentralized. And that's been a long time coming. And I think as each of these layers gets increasingly decentralized, the ultimate promise of a decentralized financial system gets more and more real.
That's a great way to
I think
look
there's
at
an
it.
interesting question there, kind
Go
of
ahead.
piggybacking off the fact that there's tens of millions of people using MetaMask, and you can start to imagine a world where hundreds of millions, billions of people are using crypto. But a lot of the way that people get crypto in the first place is with fiat on-ramp. So this seems like for a long time, there will still need to be this regulated regime with fiat on-ramp to get people in. How do you sort of think about that evolving, and the fact that the state in many countries will still have to be involved in getting people into crypto?
Yeah, I like to use, the analogy of like this futuristic spaceship that's getting built. And in the spaceship, all sorts of great technology exists, and it's like a civilized world of peace and advancement. But then, like, there's the terrestrial world with a bunch of cavemen on it. And the bridge between the spaceship and the terrestrial world is always going to be an awkward one. So moving from fiat, from banks into crypto, there's always friction. There's generally going to be KYC and compliance and like just spying on everyone done by the state. And we have tried many times to make that process smooth. We've failed every single time. It's never a good experience. It's only different degrees of less bad. And so I think, like, at some point you just accept that. It's like when you're tied to something bad, garbage in, garbage out, it's going to be a problem. As soon as you get into the native crypto world, all sorts of things open up, and people actually get privacy again. People actually get sovereignty over their money again. People actually get control, and they can do whatever they want in the crypto world. There are no boundaries other than what people can code. So that's special, and I think it's okay to have that dual world. People just need to recognize the transition between the two is going to be a little bit problematic forever.
And forever is a long time. What's your take on when a critical mass of people will be crypto native to start?
I would guess within 10 years, the locus of economic activity will move to natively digital assets. It doesn't happen next year or the year after, but probably within 10 years, that's the case. And there is little reason to go back to the fiat world once you're in crypto. Before stablecoins, there was a very good reason, which is that, like, crypto is highly volatile. It's scary. At some point, you want to, like, have some stability and be conservative, so you need to move back to fiat. But with stablecoins, you just move to the stablecoin, and you never actually have to move back to the banks, except for the moment that you need to make a, like, traditional purchase of a house or something, and that stuff's all going to get natively digital later on. So yeah, I think less and less activity needs to move back into the traditional world, and more of it will just flow into the digital economy. I think the internet is a good analogy here, right? Where people found more and more things they could do online. And now much of what people do is just done natively digital, like this call on Zoom. This is natively digital. And this was something that didn't exist before the internet. So crypto will change the world in a similar way. And I think the reason to go back to fiat is going to become less and less compelling.
So speaking of spaceships, we know that Tesla and SpaceX are holding crypto on their balance sheet, which seems like they're probably ready to transport some of those to the suborbital space stations they're building. But we've seen PayPal, we've seen MicroStrategy, we've seen JP Morgan, Goldman Sachs, even from the traditional financial arena, start to build services for clients and also hold crypto on their balance sheets. The larger tech platforms in the social space have still sort of not really done a big maneuver here. We see Jack at Twitter looking like they're going to probably implement some sort of tipping feature natively into Twitter, which is really exciting. There used to be a cool product called Change Tip for anyone that was around a while ago that like pioneered compensating people for developing great content on Twitter. And I thought it was a pretty good product. So I'm excited to see Twitter basically heading to do that natively. But just as like a quick role play, Erik, if you just accidentally woke up as Mark Zuckerberg tomorrow, and like, what would you do? Holding this like massive web of social connectivity, knowing that there's sort of like a dawn of decentralization coming at the business models, coming at how content is compensated, and what would be your maneuver if you were him?
Yeah, interesting question. If I woke up as him, first I would go dump a bunch of billions of dollars into Bitcoin immediately, right? I don't know if he has any exposure to it, but like that would be step one. And then step two would be really thinking about Facebook's future and the potential competitive threat of a decentralized platform that took off. Everyone is on Facebook. They have this huge network effect, but nearly everyone has a fundamental complaint with Facebook, which is that they're too powerful. They are really uncomfortable with the surveillance and the censorship. They're either a little uncomfortable with it or a lot uncomfortable with it. And then there are people who just don't use it because they hate it so much. There will be platforms that are decentralized that replicate all the best features of a Facebook and of a Twitter. I think anyone in the business world needs to assume that will happen. So they should probably be starting to build those systems, right? Those systems will end up being based around native tokens of those platforms. And so if you are one of those large companies and you helped build that decentralized platform and owned a bunch of the tokens, now all of a sudden you're getting the economic benefit of that decentralization. And I think that's a much better and healthier world than one that is funded through advertising and surveillance. I think that makes everyone a little uncomfortable. There just hasn't been a better alternative yet. So I can't wait to see that stuff come out. It's going to take a while, because these network effects are really strong, but I think it becomes inevitable.
We're seeing some projects already sort of head in that direction. I mean, Clout, Rally, a few other ones are looking to better compensate content creators with native tokens and tipping. So it looks like the competition is starting to knock on the door a little bit. Jason, do you want to ask one more question?
Yeah, I actually have a quick question, given that it's the flavor of the month. Have you gotten into NFTs, and if you've bought any, what's the most embarrassing one?
I have a couple NFTs, none that are super expensive. I simultaneously believe NFTs are the future and they are an amazing invention. I think it's very real. And at the same time, especially the art NFTs are in a wild speculative bubble, which is going to be very embarrassing a year from now when people realize what they were spending their money on. Speculative bubbles often happen when you have really legitimate new technologies that just explode onto the scene. So, I think anyone who's buying these things at crazy prices needs to know what game they're playing. And if they understand that they're just gambling on a speculative mania and they want to do that, cool, all power to them. But I do worry about some of these, especially like the artists and people who see the huge profit and they buy it thinking like this is an only up kind of thing. These are people that have not been through crypto bubbles or speculative bubbles in other financial sectors. Super dangerous. So to anyone listening, assume everything in crypto goes to zero. Like you should always have that as your assumption that can happen. And if you're okay losing everything that you have in crypto, then you can move forward like with your eyes wide open. And I've held that view ever since 2011 when I learned about Bitcoin. You have to acknowledge that downside risk is always there, even for something like Bitcoin at this point. That said, NFTs are awesome. I love seeing the like preponderance of them. I think it's so cool that artists can actually make significant money now from their art. I mean, that's a better world where artists like aren't starving on the street, where they can actually make significant money. I love that. And I think NFTs are going to be used in all sorts of really creative ways. So very cool stuff. I don't own any really cool ones yet, and I'm not going to buy any of the CryptoPunks, even though I'll probably I'll have to stay poor because of it, but that's fine.
Yeah,
Yeah, there's
Damien
actually-
Hirst, who's a well-known artist here in the UK, is a huge NFT project right now where he's selling dots that he's actually painted and stored in vaults around the world, I think, and at least in the UK. And then you get the NFT, and a year from now, you can pick whether you get the piece of art from the vault or if you keep the digital representation of it. And it's a really interesting exercise, and we'll see what people decide they think is more valuable.
I've heard of this project. I like it. It's very creative. That is an NFT I would probably buy, but I don't know where to buy them right now. So, but yeah, all the experimentation is just great. Like whenever you see experimentation among people, that's something to be happy about. And most of the experimentation will fail, and that's fine. That's how innovation works.
All right. Any last questions from Jason? I got one before we summarize.
Why don't you go? Close us out.
Erik, you've had an illustrious career in crypto, and the industry would not be where it is without your voice and your efforts in it. What are you going to do next? Like, you're decentralized yourself. So this is like a whole philosophical question, but like, what are you going to concentrate on? And then, yeah, I'd like to sort of hear the Erik Voorhees 6-12, maybe 18.
Yeah, I'm going to keep
roadmap.
concentrating on ShapeShift. I'd probably like to take a little bit of time off, but I haven't had a real break in 7.5 years. But after that break, whenever that is, just like back into ShapeShift, like open source ShapeShift that becomes more immutable and without all the rules and restrictions and nonsense that we've had to deal with. That is a ShapeShift that I'm ever more excited about. So that's what I'm going to keep working on. That's my day job. And then the rest of the time, I just love exploring the crypto industry and trying to keep up with it. It's kind of a full-time job, just trying to watch. Yeah.
Indeed. All right. Well, thanks to everyone for joining us today. In case you missed anything, it will be available on YouTube, on the Facebook channel, and then also on the streaming services that you can subscribe to. So big thank you to Erik for joining us today, walking us through the decentralization of ShapeShift, the future of NFTs, and much more. And thanks to Jason and the team at blockchain.com for setting it up today. Wish everyone a very good September, and all the momentum is heading in the right direction, it looks like. So we'll see that rebound, we think. All right, take care, everyone. Have a great day.
Bye, guys.